sizes. So the microfinance is the and these micro small loans at the small loan size. This is the one of the small loan size, and that is one is the micro loans are the typically small, and the ranging from the 50 to 5,000, and that is the finance range 50 to 5,000. And next one, it is the why this is the first feature, small loan size. It is only providing to the small financial service to the individuals and group of persons, but it is not take that large amount, but it is only take the small amount of the money. And next one, it is the another feature is that short repayment of the periods. So short repayment of the period means that is the loan repayment periods are usually short, means it is only take the within the 1 year, within that months and within the 1 year only, but it is not above the 5 years, not about that 3 4 years, but it will be take that 1 or 2 years, means it is which is related to the current year period and which is related to the operating period only. So the short payments period is means it is the usually short and ranging from the few months to the few years only. So that is the another feature of the microfinance. And next one, another feature is that group loading lending. Group lending means it is the many MFS means mutual fund institutions use the group of lending models. So mutual funds means which is that invest in that small units of the amount on the means the stock or if anyone. So that is the mutual funds is also using that group of lending models, and where borrowers from groups to guarantee each other's loans. And next one, it is the another feature is the saving services. So this is also another feature of the microfinance. So the mutual funds of institutions often provide the saving services, allowing clients to deposit and withdraw the funds like the banks. Okay, so it which is also providing to the one of the service to the clients, that is the depositing of the money, and means at the same time allowing to the clients to the deposit and withdraw the funds. And another one is that financial educations. So another feature it is also microfinance is also providing to the financial education. That is the many financial mutual funds institutions also offer the some financial educations. At the same time, microfinance is also providing the providing some funds to the for the financial education and training to their clients. So that is that another features of the microfinance. And next one, it is also one of the group lending. Group lending means it is also lending the where borrowers are group of guarantee of each others to loan and saving. So these all are the features of the microfinance. So first one is the small loan sizes, and the second one is the short repayment of periods and the group lending and saving services. Next, financial education. So these all are the features of the financial microfinance. And what is the benefits of the microfinance? So the first benefit of the microfinance, which is the microfinance is provides the it is access to the financial service to unreserved population and under-reserved population and below middle class family and below the some age, it means below the some certain amount of the money. So it is the providing of the financial service to the middle class family, at the same time low income peoples also, and that is the one of the financial inclusion. And another one is the poverty reduction. Oh, one of the benefit of the microfinance, which is that poverty reduction means it is can be helps to reduce the poverty by providing of the entrepreneur with help to start or expand the business. For example, poverty reduction. If you, for example, you start up the any small scale industries, or if any small business that like that entrepreneurship, you don't have that sufficient money for start up that business. So this type of the institutions will be providing to the financial service to the startup entrepreneurs and single individual entrepreneur and investors. So they are using this type of the financial resources in efficiently and effectively for future course of the actions. So that is the one of the poverty reduction. And this is also helps to the providing the financial resources. It is very useful to the startups and the entrepreneurs for means startup and smooth functioning of the operations. And next one, economic growth. Another day advantages is that economic growth. That is the economy. Microfinance is also can continue to economic growth at the same time by promoting that entrepreneurship and job creation. So microfinance is also one of the benefits to the creating of the job facility, creating of the some resource to the unemployment. So it is also one of the helps to the unemployment person, and it is also help to promoting of the entrepreneur for expand of the businesses. So this is that another benefit of the microfinance. And next one, empowerment. So microfinance is can be empower women and other marginalized groups by providing them with access to financial service and economic opportunities. So this is also another benefit of the microfinance. So total microfinance, what is the advantages of the microfinance? One is the financial inclusion. So financial inclusion means it is the providing of the financial services to the unreserved populations and poverty reduction. So financial microfinance, which is helps to the middle class and at the same time entrepreneur starter who has the starting the business without the finance and without the financial resources. So which is helps to the entrepreneurs, and it is also helps to the single investor, which is helps to the sole proprietorship, and which is helps to the partnership also. So that is the so they are using the financial resources in efficiently and effectively for expand of the business. So that is the one of the benefit. And another one is that economic growth. So microfinance can contribute that economic growth by providing and they give that entrepreneurship job creation. So it is also you will be start that one of the company or if any entrepreneur. So this is also helps to the number of persons. So they are utilizing these resources and utilizing of this opportunity for expand of the profits, and it is also expanding of the business. So that is the another benefits of the microfinance. And next one, it is also empowerment. So empowerment is also it is also helps to the means can be empower of the women and other organized group by providing them so that is the with access to the financial service and economic opportunities. So these all are the benefits. And what is the challenging of the facing that microfinancing? So that is the high interest rate. So this is the one of the drawback which is related to the microfinance, because it is the very high interest rate can be means given by the this type of the institutions and make it difficult for borrowers to repay that loans compared to other financial institutions. So it is a very high interest rate than banks or if any financial institutions. So that is the one of the disadvantages of the microfinance. And next one, it is the limited funding. So for example, bank is providing to some type of the limited funds, and banks is also have to maintaining of the fixed deposits and mean savings account, current accounts. So savings account, they have that limited amount and limited terms and conditions. But the current account, it is no limited. You can be deposit anytime and you can be withdraw that anytime without the limitations. Okay, so but it is compared to the banks or if any financial institutions which is only providing of the limited funding to the limited funding. So mutual funds institution often face the challenges in that accessing fund. At the same time, which can limit their ability to provide the service to clients. So microfinance institutions also providing the limited service to the clients, and funds is also providing to limited their clients. So that is the another challenging of the and the disadvantages of the finance microfinance. And next one, it is the regulatory challenges. So regulatory challenges means mutual financial institutions must negative complex regulatory environments. At the same time, which can be time consuming and costly also. So, which is the main regulatory challenges means you can, if, for example, you can be regulating of the any financial institutions. We have the one of the step by step process and one of the regulations. So means for example partnership act. So partnership which will be provided, that is the 1932 partnership act. At the same time, companies act 2013, they are following the some rules and regulation before the start of the business, before the starting the operations. At the same time, microfinance is also running of the operations before the they can provide, they can fill that some steps, step by step process, and can be give that some means required documents, and give that some explanation to the concerned department. So that is that one of the challenging. And this is also take the time, means which is also time consuming, and it is also very costly. So that is the regulatory challenges. Another one is that risk management. So microfinancial institutions must manage that risk. So risk associated with lending to undeserved population. So this is also undeserved populations is they cannot able to pay the pay that money within the time and within the within the some conditions. So this is the major drawback of the microfinance institutions, and it is also including of the credit risk at the same time operational risk. So this is the all the challenging of the microfinance. One is microfinance means it is that financial service to provide the group of our individual, and it is also providing to the their clients, and it is the small loan and savings and other financial products to the small financial products to providing of the group of persons and individuals. So that is the benefits and drawbacks of the finance microfinance. And next one, it is that examples. What is that examples of the microfinance institution? One is the Grameen Bank. So Grameen Bank, it is the pioneering of the financial microfinance institution in Bangladesh that provide the micro loans to the rural women and rural areas. So that is the one of the good financial microfinance institution. And next one, BRCA, that is the Bangladesh based on financial microfinance institution that provide the micro loans or savings services and other financial products to the unreserved populations. At the same time, so the nowadays it is very helpful to the startup at the same time single entrepreneurships. So the microfinance, it has that potential to transform the lives of millions of the people around that would by the providing access to financial services and economic of the opportunities. So these all are the main meaning of the microfinance and key features of the microfinance, benefits of the microfinance, and drawbacks or disadvantages of the microfinance. And next one, examples of the microfinance. Then next one, it is that what is the microfinance means. This is the types of the microfinancial institutions. So finance institution, one second. Institutions. So there are so microfinance institutions can be categorized into different types based on their ownership structure and business model and a target market. So this is also they so it can be divided into some categories. It is based on the ownership structure, means it is the based on the ownership of the financial institutions and based on the business model and based on their target market. Here some of the main types of the microfinance institutions. One is that non-governmental organizations of the microfinance institutions. So that is owned and operated by NGOs, non-government. It is called in that name is called non-government organizations. So non-government organizations which is related to the non-government. So that is the organized by the NGOs. So this is focus on the only social missions and poverty reduction. This type of the microfinance institutions is focused on means the finance, social missions and poverty reductions. At the same time, often rely on donations and grants, which is also providing to the donations and grants to the means for the utilizing of the social activities, and that is the for utilizing for the reduction of the poverty. So that is the non-governmental organizations, means NGOs. So, and other one is that cooperative financial microfinance institutions. So this is owned and controlled by the members. So members means cooperative societies. So this is according to the 1972 Act, which is providing that all the terms and conditions. So that is controlled by and means organized by the group of members, and it is operate on not for profit. So which type of the institutions is operated not for the profit basis, at the same focus on service members and financial needs. So another one is that commercial bank microfinance institutions. So one is that owned, and this is that owned and operated by the commercial banks. At the same time, this type of the institutions is offer the microfinance service as a part of their overall banking business. At the same time, nowadays, many companies or many banks will be providing to the financial service to their clients, because that is the providing one benefits to, at the same time they can be providing to their consultancy services also. So that is the entire, so even offer the microfinance service, it is also one of the part of overall banking by business. At the same time focus on profitability, at the same time sustainability. So which is the two parameter is focused on. One is the profitability and another one is the sustainability. And next one, microfinance banks. So microfinance banks is also specialized banks that focus on that microfinance only. So this type of the banks only focus on the microfinance only. So this type of the institutions only gives to the service to the microfinance. So offer range of financial services including savings and credits. So this is the another one. And the next one, this is that regulated by the central banks or if any financial regulatory authorities. So central bank, it is that RBI or if any financial regulatory authorities. So this is that another type of the microfinance. And next one, it is that credit unions. So members owned and controlled cooperatives. So credit unions means which is also one of the unions or institutions which is a member owned and control the cooperatives. So member owned means it is a group of member, has that group of member and owned and controlled by cooperatives. So that is the providing that financial services and including the credit and the savings. So it is also providing that financial service to including that credit and savings to members. And the next one, this type of the unions means only providing service to their union members only. Okay, union parties only, union membership, who has that membership in that union, they will get the benefits from the union credit unions. And next one, focus on serving members' financial needs. So these are so one of the institutions regarding to the means finance, microfinance. And next one, village banks, community-based microfinance institution that operate in rural areas. Village banks is only maintained in that villages and remote areas, which is only related to which this type of the banks is established in the only rural areas. So this type of the community based on microfinance is also cooperate in that and operate in that rural areas and owned and controlled by the local communities and controlled and owned by the village areas and village remote areas only. So this focus on providing of the financial service to rural populations. Okay, at the same rural populations. And next one, online microfinance institutions. So which is used to the digital payments, which is so online means that is the digital payments. So digital payments platform to provide the microfinance services. At the same time, often partner with the traditional microfinance institutions or banks. Next, focus on reaching unreserved populations through digital channels. So these all are the some types of the microfinance and some types of the microfinance institutions. So next one, online mutual funds, and next one it is the providing the finance to the so unreserved populations, and which is also providing finance to the rural areas, and which is also providing finance to the union credits. At the same time, self-help groups. What is that? First of all, self-help groups means, for example, uh, self-help groups means, for example, they are maintaining and providing of the some finance. So means, for example, small scale industries. So that is the uh, so providing the means it is a small voluntary association. Means self-help groups means it is the small voluntary associations of individual who come together to find the solution to their common problems. So what is the self-help groups? Is a small voluntary association. It is also small voluntary institution. It is also small voluntary association of the individuals, so who come together and to find out that solutions to their common problems. At the same time, self-help groups is also often formed under marginalized communities, such as the first women and rural populations are those living in poverty. So this is the so that is the marginalized communities. So one is the character. What is the characteristics of the small help groups? Means that is the voluntary membership. That is the one of the main characteristics of the voluntary membership. So members join in the group voluntarily and participate the decision making process. So one is that voluntary membership. At the same time, small group size. What is a small group size? It is typical consistence of the only 10 to 20 members. So this type of the groups only have that member to 10 to 20 members. And the next one, what is the common goal of this type of the small help groups? Means that is the members share common goals. They are share that common goals and they are share that common profits, such as the economic empowerment and social justice or community development. And next one, self management. So small help groups is also self-managed and with members tasking responsibility for decision making and problem solving. So that is the self-management. And next, what is the benefits of the self-help groups? That is the first one is that economic empowerment. So self-help groups is provide the access to financial services and such as the savings, credits, and insurance. So that is the one of the empowerment which is related to the women at the same time and reserved populations. And next one, it is the social empowerment. That the first one, it is the economic empowerment. If economic empowerment, which is related to the finance, credits, or insurance. So then next one, it is the social empowerment. So social self-help means small help groups promote the social empowerment. Provide means it is also by building a confidence and build up that leadership skills and the social networks. So which is that related to the social empowerment means providing to the give that pull up the confidence and give that confidence and will be increasing of the leadership skills at the same time, which is helps to the social networks also. And next one is that community development. So community development means this is a means self help groups is also contribute the community development by address local issues. So address that local issues such as the healthcare, education, and infrastructure. So that is the another benefit. And the next one, which is the support of the network. So self-help groups provide the support network for members, and support for means that is the individuals, support for the group of persons. So help them cope with the personal and financial challenges. Will be providing to the financial services as well as the social service. So that is the supporting to the network to their group of persons, networking to their group of members. So that is the another one. And next one is that activities of the self-help group of persons. So one is that savings and credit. So savings, self-help groups mobilize the savings from the members. So they can collect the money from the members and provide the credit for various purposes such as that income generations, education, and healthcare. So these also collected from the some percentage collected from the members, some percentage collected from the various persons, but which is also providing to the some type of the services, various services such as that one of the providing of the opportunity to income generations, and it is also providing service to which is related to education and healthcare. So that is the savings and credit. Next one, income generations. So the self-help groups engage that income generating activities, that is such as the agriculture, livestock, and small scale enterprises, which is also providing funds gives to the agriculture sector, and which is also gives the funds on investment on the securities, and it is also providing funds to small scale enterprises or small scale industries. And next, so this is also where it is that one of the benefits to generating of the income generating of the wealth. So next one, training and capacity building. So training and capacity building, the self-help groups is also provide the training and capacity building programs for members. And it is also focusing on skill developments and leadership and entrepreneurship. So which is also providing training to their members, and it is also providing give the some suggestions and give the some ideas to build up the leadership skills and entrepreneurship. So that is the another one. And advocacy and lobbying. So it is also advocate of policy changes and lobby services to support their community development of the initiatives. So that is the all the what is that activities of the self-help groups. So first activity is the providing the savings as well as the credits and income generation. The first activity is the income generation. So which is also providing service, which is also funds gives to the agriculture, living stocks, at the same time small scale industry. So this type of the resources will be increasing of the financial resources and generating of the financial resources. And next one, training and capacity of building. So next one, what is that examples of the self-help groups? So women's self-help groups, many countries have that self-help groups means women's. So It's been self-help groups that focus on economic empowerment and health and educations. Next to farmers self-help groups means farmers also maintain of this type of the groups. That is the common. This is the very common in the rural areas where they focus on the agriculture development and marketing and advocacy. So that is the farmers self-help groups. And next one is that youth self-help groups. So youth is also maintain the this type of the groups that is the formed by young people to address issues such as that educations, employment, and leaderships development. And they are also guides to the means guides to the teenagers, and they are guides to the number of suggestions and ideologies also gives to the juniors. Okay, and some what is next one, it is that youth self-help groups. So these all are the examples of the self-help groups. First is that women's self-help groups. So this which is related to only women's. They are focusing only empowerment and health and education. Then farmers self-help groups, which is only related to the farmers, and this is that main common of the in rural areas. So they are focused on the how to development of agricultural activities and how to development of marketing. And next one, youth self-help groups. So which is also very common in the rural areas or township or anywhere. So by so this is the this type of the institutions is formed by the young people, and they are give means address issues such as that education, employment, and leadership development. So these all are the main examples of the self-help groups. And then that the next one is that another important topic is in that microfinance. First, next one is that microfinance models. So microfinance models uh, in this scenario, models are types is the same, but some of the models will be discussed in that. The models are innovative approaches. So models means innovative approaches. Innovative is will be creating of new things, will be creating of the new things and give that new ideology to providing financial services to the low income individuals, entrepreneurs, and small business. So these models aim to what is that the microfinance model aim to promote financial inclusion and economic growth and poverty reductions. So some group lending model and individual lending model and village banking model. So first one is that group lending model. What is that group lending model? So borrowers from groups to guarantee each other's loans. So borrowers forms group to guarantee each other's loans. And next one, encourage peer pressures and social collateral. At the same time, reduce the default rates and the transactions cost. So they can reducing of the default rates, they can reducing of the interest rates, and they can reducing of the transactions cost. So that is the group lending model. So group lending model means which is a form of the group of members to guarantee each other's loans. And next one, individual lending model. So loans are provided to loans means if any loans are provides to. At the same time, loans are provided to individual borrowers. So individual lending model means if any loans and financial service is also provided to the individual borrowers. So require that traditional collateral and credit worthiness assessment. Next one suitable for it is the larger loans amount and more established business. So that is the individual means which is this type of the finance which is very help for the sole proprietorship, and it is also suitable for larger loan amount and more established of the business. So this type of the finance only gives to the individual borrowers only. And next one, village banking model. So village banking model means it is the community based model, and this type of the model is that where villagers pool their services and resources and provides the loans and the savings and other financial services. This type of the microfinance which is only providing to the villagers, and which is only villagers pool their resources, and they can get the resources from this type of the village banking model. And they, so this is also providing the loans and the savings at the same time other financial services also. So empowers that local communities to manage their financial affairs. Next one, cooperative model. Next one is that cooperative model. So that is also maintained and managed and controlled by the member of person. So that is the cooperative is also provide the financial services. Members hold their services and share the risk, and promote that social and economic development, promote that social activities and economic development. And next one, another model is that mobile banking model. So mobile banking model is also which is that digital payments and which is the useful to the network, means technology. Use that mobile phones provide the financial services. Using that mobile phone, and you can be payment to one person to another person. You can be transaction one person to another person, and you can be give the information which related to the financial services one person to another person. You can do anything in anywhere. You will be transferred to the one place to another place. So that is the one mobile banking model. It is also enables the remote transactions, payments and current management. So payments, so payments is also sent to anywhere. Payments also sent to any time. Okay, and any transactions, okay, you can be do anywhere or any place. Next, and it is also increase the financial inclusions and convenience. It is that very convenience of their first party and third party, means investors and individuals and the lender or borrowers. So that is the another model, mobile banking model. And another one is that agent banking model. So partnership with local agents, okay, partnership with a local agents to provide the financial services. So this is the agent banking model. The agent banking model means which is the partnership only with the agents. So this is also providing the financial services, and agents act that one of the intermediators of the intermediators between the clients and financial institutions. So agents are who is the one of the intermediator, okay, intermediate between of the savers and financial institutions and savers and lenders, and increase access to financial services in unreserved areas. And next one, digital microfinance model. So digital microfinance model, it is the leveraging of the digital technologies. Leveraging means that is the risk measurement. So digital technologies to provide that microfinance services, and it is the including of the online lending, mobile payments, at the same time digital wallets. Enhance that efficiency, reduces cost, and increase that outreach. So these all are the digital microfinance model. So digital microfinance model, on so you can be you take that loans from the online, and you can give the loans all through online. So you can payment and you can withdraw anywhere through only online. That is the digital microfinance model. And which is also another model is that social enterprise model. So social enterprise model combines the social mission with the business principles, and provide the financial services to unreserved populations, and the main aims to the achieve the in social impact and financial sustainability. You can some of amount is spent on that way social activities, and will we use the some loans and donations to the NGOs, and give the some donation to the for the purpose of the education. So give the some funds for the healthcare and insurance. So these all are the social enterprises of the model, and we will be providing of the good good environment situations and good environment also. So that is the whole model of the microfinance. So again, I will be revision of all these factors. One is the microfinance. So that is the definition is the which is the providing that microfinance to the individuals and group of persons like that savings loans and means financial products to the individuals as well as the group of persons. And what is the key features of the one? What is the features and what is the characteristics of the microfinance? One is the small loan size. It is only take the small size of the period, and that is the 10 to means that is the at the same small range of the amount, that is that 550 to 5,000, and short repayments period. So short repayment periods means it is only few months or few years only, but not take that long period of time. And next one, it is a short payments periods. Short payment period, it is usually short range from that is the payments of the one within the year and within the to 1.5 year only. And next one, group lending means this many microfinancial institutions use that group lending models. So where borrowers from groups to guarantees each other's loans, and saving services. So saving services allowing that clients and to deposits and withdraw funds. So financial education. So many micro financial institutions is also offer the financial education and training to their clients. And many financial micro financial institutions gives the many loans to the education for at the same time train to their clients for the expand of this business and expand of these resources. And next one, it is the benefits. One is the financial inclusions, and another benefit is that poverty reduction, and another benefit is the economic growth, and another benefit is the empowerment. So these all are the benefits of the microfinance. And what is the disadvantages and what is the challenging of the financing facing that microfinance? It is a very high interest rate then compared to the other financial institutions and banks. At the limited funding, it is only providing the limited funding but not providing of the larger amount. It is only give the small scale of amount only. And next one, it is also which can limit their ability to provide the service to clients only. And it is service is also very limited, and amount of the financial resources is also very limited. And regulatory challenges, it is the very regulating of any issues or regulating of any matters, which is that very challenging. And next, risk management. So very high, it is also this type of the service is providing to the unreserved population. So that is also one of the drawback, that is the only including of the credit risk and operational risk also, because unreserved people and unreserved population, they are not able to pay repayments to loans in within the time. So next, examples, green bank and bark. So these all are the some types of the microfinance. And this is also types. One is the non-organized governmental organizations of the microfinance, that is the NGO microfinance, cooperative microfinance, and commercial microfinance, and microfinance banks, and credit unions, village banks, and online microfinance institutions. So these all are the types of the microfinance. which is also related to the commercial banks. So one type of these the one NGOs and another type of these cooperative. This type of the microfinance which is organized by the group of members, and the commercial banks of the microfinance. This type of the institutions is organized by the commercial banks, and microfinance banks which is also organized by the microfinance banks, and credit unions which is also organized by the credit unions, means like that cooperative, and micro village banks which type of the organizations is also operate in that rural areas or remote areas, and online microfinance. So this type of it is that one of the digital platform to provide the microfinance service to their clients. So that these all are the benefits, disadvantages, and types of the microfinance. And next one is the self-help groups. So this is a small voluntary association of the individuals who come together and find a solution to their common problems and common issues. So this is the characteristics of the self-help groups. One is the voluntary membership. This is only based on the service, and this is only voluntary membership, and it is only small group size only, but not that large group of the size. And the next one, it is the common goal. So everyone have that only one goal, one benefit, or one profit only. And next one is the self management. So self managed, with members taking responsibility for decision making and problem solving. And what is the benefits of the self-help group? That is the one of the economic empowerment. Economic empowerment will be providing that financial and savings and credit or loans also, loans to their clients. And next one, social empowerment, which is also providing their social empowerment to their clients. And community development, which is also providing contribute community development by addressing local issues, and healthcare, such as that healthcare and education and infrastructure and support network. And what is that activities of the CSHGC, means self-help groups? One is the savings and credits, and economic generate income generations, training and capacity building. And the next one examples is the one is the women's, which one institutions which is related to the women, that is called the women self-help groups. And farmers is also maintained that one of the microfinance institutions, that is the farmers microfinancial institutions. And youth is also maintained that one of the self-help groups. And what is that models of the microfinance? Group lending model, and individuals group lending model means it is the group to guarantee to each other's loans. So there are group of members come together and find their solution and find their problems, will solving of their problems. And the next one, it is that individual lending model. So this type of the finance only providing to the individual borrowers, and require the traditional collateral, means it is the and credit worthiness of the assessment, means we give that security, like that property documents or if anything. And it is only suitable for larger loan amount and more established businesses. So that is also another model. And the next one is that village banking model. So village banking model, this time it is that very useful for the villagers. It is they will get the resources from this type of the model, and providing the loans and savings and other financial services to the villagers. So so it is also empowers local communities to manage their finances of. And next one, cooperative model. Cooperative model is also members organizations, and it is also controlled by the member. So the members also pool their resources and share risk. And next one, mobile banking model. So the mobile banking model is also one of the models, so which is the one of the you can be transaction, you can be payment, you can be withdraw anywhere, anywhere or any place or any time only through the mobile. And next one, agent banking. So agent banking is also uh, This is the one of the partnering with the local agents to provide the financial services, which is the agents are acts to intermediaries between of the clients and financial institutions and clients and borrowers, clients and the lenders. And digital micro, so it is the platform of the digitalization payments. So any payments only through the network or digital technologies and lendings, payments, and digital balance, all those only through the digitals. So social enterprise model. So social enterprise model, which is only not only providing of the finance, which is also providing to the social services and reserved population, aim to achieve that social impact and financial sustainability. So this is the total discussing about that microfinance. Next, tomorrow we'll discussing about the what is that microfinance in India. What is the role of microfinance in India, and what is that activities, and what is the main features of the microfinance in India. So this type of the, so what the microfinancial institutions, how to work in India and how to operations in India. What is the situations in microfinance in India? So it is better for villagers or not, but it is what is the benefits and advantages, disadvantages. So these all are discussed in tomorrow.